Hello, T3 traders. I hope you're enjoying the holiday weekend. Sami Abusaad here with another SST video. I do these videos to give you a market update, but also to share with you some of the ideas I'll be looking at for next week. Let's start off by looking at the market. This is the daily chart of the QQQ, which is the tracking ETF for the Nasdaq 100. I use the Qs because it's dominated by technology companies, which definitely lead the market. The market is in an all-out downtrend on the daily chart with lower highs, lower lows. We talked about last week about how the market was a bit uh, sloppy. We had an hourly chart that was looking higher, and then a daily right at the declining 20. And I said, the only way this market is going to drop is if we break this pivot first and we gap down. We gap down, not we didn't clear through a gap, but we gap down a little bit and then cleared it through the sell-off, and now we're actually below Friday, a bit below the low that we established at the end of October. So all out bearish. We are a little extended, and we are at the rising 20 on the monthly chart at support. So if we get, so here's the thing, I don't know if we're gonna get a bounce or not right here. Okay, but here's what I do know is if we get sold really hard, we'll get really extended on the daily chart, and we should have a snapback. Okay, so that's what I'll be anticipating is if we get a big sell-off early next week, is to get a snapback to the 20 MA on the daily chart or somewhere around 165. But no, make no mistake about it, the market is bearish currently on every time frame, pretty much on every time frame. Weekly is also bearish, broke the uptrend long time ago, and almost in a free fall, but it is extended also. So just keep that in mind. As far as what to watch for next week, admittedly, there's not a whole lot. I scanned this weekend and this morning, and there's not a whole lot that I love the for Monday or Tuesday. But I'll be scanning. I scan every day after the close, and I refresh my list. So I'm going to share with you some of the ideas. But again, it's not the best list I've ever seen. Krone, a weed stock. Usually when the stock goes totally climactic, I don't touch it. I don't, and it falls like Telray or TLRY. You know, I just don't go back there, right? If it goes climactic, it's usually that's the top, and from there it just keeps falling. But that doesn't mean you can't play it swing for a few days, right? As long as you get out timely, then I think is okay. And then the Telray looks okay. Krone, in my opinion, looks better to go back up to about $10. Okay, so I like the Krone higher. This list is sorted alphabetically, so it's not sorted by quality or preference or anything like that. IT, I'll go ahead and tell you, IT is one of my favorite because of the larger time frame. That's a gorgeous looking weekly buy setup, weekly pullback to the rising 20, and monthly looks good too, all out bullish, way more bullish than the market. Daily has a curling 20 MA, which tells me it's about ready to transition higher. So I just want to see it clear 148.50, I think. And I do like the IT very much as a long-term play, not just a swing, but to get back up to 160. Okay, on the IT. RYB, this is more of a swing because this was not a novice gap, but it dropped a lot. It gapped down a lot, and then it dropped a lot. So this would be kind of just for a few days over the base, stop under it. Okay, target would be the prior bar's high, the resistance, which is around 1150. SREV is a transition A. It's looking better and better. We looked at it, I think, last week also, but it never broke out, and now it's looking better. This is how when you get a curling moving average, see that uh, moving average that's turning the corner, almost turning up, that's when the stock is usually ready to go. Now, a lot of these look a little, I mean, are thin, but are especially thin because of the yesterday was a shortened day, and the day before, what was yesterday? Yesterday is Friday. Yeah, yesterday was a shortened day, so we didn't do a lot of volume. So some of these are thin, but are especially thin now that we're in a holiday week. Okay, but this looks good. And then SUM, same exact idea. Same exact transition A set up on the daily chart. Notice the gap down there? What happened? Got bought, right? Look at the volume that it got bought on. Look at the size of the bar. And the stock went up and is now basing right at that moving average, right at that curling moving average. Hourly moving average 20 MA is starting to point up, so just over the base, stop under it. So I like the SUM exactly the same as the SREV, but this is a whole lot more liquid. SPB, tell you the truth, this triggered yesterday already, but I thought I'd include it on this list because it just barely, I mean, it triggered over 51 bucks as a long. Still looks higher. The daily chart here is kind of messed up. I don't know why. It doesn't look like this on my other platform. So I'd have to really open it up to show it to you. So it had a big gap down and is breaking out. This would be a counter trend trade with a retracement target of about 57 bucks. The prior bar's low, which is minor resistance. Okay, so that's the SPB. And then TLND, I'm in this closed CLSD. I talked about it last week and it triggered. It's not really going, but it's up 15 cents, I think, or something like this. And then IVC also, same exact play, down a lot, and then it flipped, right? So I'm in this, I'm in the IVC, I'm in the CLSD. Well, this would be the same exact idea. Okay, so the gap down, the sell off, and then the turn back up. What I don't like about this, notice how on the hourly chart still under the declining 20 rather than a rising 20 or a 20 that's turning up. So that's what I don't like about it. The entry would be over 34.88. Again, look at the IVC, look at the moving average pointing up, right? The other one was CLSD. Look at the moving average pointing up. So those are better. That this is the same kind of idea. All right. So those are some bullish watches. Bearish watches, we have BEDU, super thin, under the base, stop above. Not going to talk about it too much. CDE, I had it on last weekend's list, and that was there were two plays that day on Monday. One didn't trigger. This one triggered and got to the target all in the same day. So as a sell setup, notice, beautiful on the hourly chart. Short, stop, tight stop, and target was 410. Got right to the target. I think a couple pennies below it too. Yes, 2 cents below it. Maybe more. No, just 2 cents below. So got right to the target and is now back down to the lows and is basing at the lows. So I like lower one more time. Now would be more of a breakdown than a sell setup, obviously. CDE is gold and it's just so bearish, unbelievably bearish. Into a void, momentum moves leave behind no support on the way up or no resistance on the way down, right? So momentum move up, left behind no support. Once it topped, coming back all the way down, it looks like. This was the move that we got in gold, especially the gold miners, such as the CDE. So a few years ago, it was so special, I thought, because here it was, 2016. I mean, from just the beginning of the year, $12, 12.40 to the top $32 almost, right? And that's the sector. That's the GDX. And it ate through resistance, multiple levels of resistance. I thought this was so special that we should continue higher, that this was the bottom, and now it's not looking so good, right? GDX. There are some gold and silver stocks that look okay, but the majority don't. The majority are actually giving back all the gains from 2016. Again, this was a very special rally because we just rallied and then kept going. You don't usually break multiple levels, pivots of resistance. This is a monthly chart without actually basing or pulling back. But we didn't really pull back other than one red bar. And we tripled, right? And then now we're falling apart almost. So kind of disappointing, but we'll see. Not disappointing if you're playing short, which CDE I did last week. I mean, last Monday, right? So I don't know if that's considered last week or this week. EIX and PCG, PG&E. I thought they both looked a little bit higher earlier this week, but now they didn't break out, and they might be actually okay shorts under the base, stop above. The only issue with something like the EIX and the PCG, the utility companies in California that are affected by the fires, they started the fires, right? Um, they're subject to news. I mean, there's a lot of news probably coming out on these stocks, so just that's the only thing that would scare me away, that would keep me away from playing them, and it has so far. It has. So I'm not really keen on playing the AIX, though it looks okay under the base with a stop above it. MED triggered yesterday, but I thought I'd include it on the list anyway because it looks good, lower. I was in the MED short, picked the exact top. Would you believe? Exact top. Now, you don't need to believe me if you're in the strategic swing trader program because you probably took it with me. Covered it, and uh, and then and then it reported earnings and of course collapsed. I probably made a mistake that I didn't keep a runner position even into earnings because once a stock does this, look at this, guys. Just look at this. From 50 bucks, that's in 1 year to 250. In fact, to 260, right? In 1 year. It just once it tops out, once you catch it at the top, which I did, just don't ever let it go. I mean, pretty much don't ever let it go. So this looks lower to $100. I let it go up here, right? So that was kind of a mistake. So I like it lower to 100 bucks. Okay, we'll see, but it's extremely wild, so be careful. And then UNG is pretty interesting as a double top. So far, it's holding. And what I don't like about the double top is it has, still in an uptrend, higher highs, higher lows. When it's a true double top, the stock typically the lows are no longer higher, so it goes flat and then it breaks down. So we're still maintaining the higher highs, higher lows. So that's what I don't like about it. But it's the beginning of a possible M pattern or a W or a double top, right? So short would be right here under the base. Stop could either use this pivot or that pivot. I would use the tighter pivot and use half a risk unit rather than use the larger pivot because the larger pivot then you have also more resistance, in which case you might as well use this as a stop. And if you use this as a stop, then it's too big of a stop. So I'd actually rather use the aggressive entry and stop, but just lower my risk size, my share size, basically. So those were some ideas. I have not yet picked the plays for the strategic swing traders. I'm gonna do so right now after I finish recording the video. But if you enjoyed the video, give it a like, give it a love, share it. Let me know that you like it. If you have any questions, feel free to reach out to me. Enjoy the rest of your weekend, and I will talk to you next week. If you're in the black room, I'll talk to you on Monday morning. Take care, everybody.